Okay, when a microinsurance company they are willing to insure the account, the lender's risk is actually reduced. And when the lender's risk is reduced, they will have to charge lower interest rate because this is less risk to them now. So now you can have lower interest for the farmers, and the farmers do not need to collateralize the entire account. They could be just 10%, 20% of the account. He still owns the account, but it's just that he can sell a portion of the token. He fractionalized the cow, okay? And the cow has got cash flow from the milk and from the calf and so on. So they can actually, there's cash flow to repay the borrowing. So actually you democratize the service of microinsurance. You created new micro-lending business, microinsurance business. We are now up to here, and then you need to decentralize. When you decentralize, you can cross-border. Now sitting in this room, we can buy 10% of the token of a cow. So we can, in this room in the Philippines, we buy 10% of the cow and help the farmers. So it cross borders, okay? And it doesn't have to be limited to a country. And this is beginning to happen. I will talk about diminishing oneself later, which is what Libra and Zuckerberg is trying to do to diminish himself, so that Libra Association take over, because that's a very good strategy for cross-border, and of course the last stage is data privacy protection. These are the six stages. Most of the countries are up to this stage. They have a platform that digitalize, they disintermediate, they democratize, but they don't decentralize, like Alipay, like WeChat Pay, and so on. And most of these companies has got low margin, asset light, they scale to serve a large number of people, they're innovative, and they have ease of compliance. It's the same time and energy to serve one person who give you $1 million at fees as to the needy who will give you $1 a day to serve them. So you have to serve them in large number, okay? And the needy always pay higher charges, okay? And they have a higher marginal propensity to consume. So if you serve a large number of them using technology, using asset-light technology, using very innovative micro-insurance and micro-lending through blockchain and other technology, and you have a very easy compliance environment, then a lot of problems can be solved by using blockchain, okay? And then you can have economies of scale, like Alipay or Grab, to build a large number of people onto your platform, and slowly introduce insurance services, introduce wealth management services to the needy, introduce utility payment, and so on. So you start with economies of scale, then you start with economies of scope. But then we have a problem, we don't decentralize. Because all these platforms will lead to a concentration of power and wealth, and a concentration of data ownership. Okay, so the first three will lead to a major problem for all government. No government wants to have a digital empire in their country. So all these platforms will have to be decentralized. And the government will force them to diminish themselves. Okay, so that the wealth is being spread, is distributed. And because the raw material for all virtual world is data. So who owns the data become very important, so data privacy protection become key. So we will see this process going through, and blockchain is going to play a major role in this entire process. Okay? We are now at this stage of democratization, and we're moving to decentralization. Okay? We will see that government will force all these platforms to diminish and distribute the wealth. Okay? And eventually, there will be a lot of focus on data privacy protection. So how blockchain are unfolding and playing what role in this? So let's talk about the history of trust, intention, and business model as we go along. Okay, blockchain and inclusion. Now, these are some of the companies that I talked about earlier on. I talked about InfoCorp, the cow token example. So this cow token model is being used in Rwanda because after the civil war, the cows are being redistributed as a way of distributing wealth. As in the case of China, they distribute land to the farmers, but in Rwanda, they distribute the cow to the farmers so that the farmers have a wealth. ATAC actually used blockchain for identity for refugees. Refugees will have no identity when they get out from wherever they are, and without identity, you can't do anything. So on the blockchain, you have combining with other technology like facial recognition, voice recognition, you can have the identity on the blockchain, and then once you have that, you can do donation to the individual. And the donation will reach the individual with the facial recognition and voice recognition. And this is what ATAC is doing, transparency of donation. But you need to go towards the right people, especially the female refugees, because there are a lot of human trafficking of children, there are a lot of human trafficking of females in the refugee zone. So blockchain becomes very important, and donation is jammed because people hear the rumors that $100 being donated, only $10 or $20 reach the refugees. So here, blockchain will show you the entire historical payment chain to ensure that refugees are taken care of. Okay, and Smart Mesh in Meshbox is about communication. I will talk about that in a while. And this is the motivation, right? 1% in 2017 control 50% of global wealth, receive 82% of the new wealth generated, low margin propensity to consume, leads to margin squeeze, result in new growth. Where is the future growth? Financial inclusion, okay, e-inclusion. Okay, so this is what is happening in Asia. 73% are unbanked, 438 million without bank accounts, more than 100% of handphone penetration. Almost every farmer in Myanmar will probably have a phone. Okay, the penetration is very high, 70% to 100%. Okay, so financial inclusion is important to have communication inclusion. Connectivity inclusion is key to e-inclusion, and blockchain plays a major part in mesh network. The needy do not like to have a data plan, because the minute you default on one payment, your credit rating will drop and your borrowing costs will go up. So they would like to have a per use basis for communication. And it's important to look at Smart Mesh and Meshbox, because all these Meshbox can link up the entire village or remote island or remote mountain villages using the Meshbox generated by solar energy, okay, and use one satellite to link up the entire village without pulling any cable, without building any roads, without destroying any environment. And blockchain, with combining with Smart Mesh, they are doing that, and the company is called Smart Mesh and Meshbox. All these companies are all based in Singapore, okay, and they're moving into Philippines, they're moving into Indonesia, they are doing all the things they are doing, and they need all the help of the regulators to help them to be compliance easy. Okay, so the demand is from the excluded, the people excluded, not only people, but the assets. Remember the cow, the poor are not poor because they have no assets. They do have assets, but it's just that those assets are not tradable. They are not liquid. So blockchain can democratize ownership, can fractionize ownership. Okay, they can allow all this to be tradable. Okay, but what comes with it is fintech literacy. We have to be very careful, right? It's not always about promoting blockchain, but we have to worry about fintech literacy as well. Because we always talk about financial literacy, but we've forgotten about now it's not just financial literacy, it's technology literacy as well. And technology literacy is a lot more complicated than financial literacy. And you can see those examples with M-Pesa in Kenya. And earlier this year was in Kenya, and you can see from the central bankers, they're all worried that all the gaming companies are pushing gaming to all the farmers and so on who are connected by e-inclusion. So as all of us working in the space, we have to focus on fintech literacy as well. And that's why it's so important to understand what blockchain can and cannot do, and how we can use regulation to direct towards blockchain doing good. Okay? So this is tokenizing the non-securities is important, fractionalizing the ownership of the cow is important, serving the underserved is important, serving the great mystery of leapfrog economies, cheap capital is important, convergence of technology is important to protect the environment, sustainable green business model is important. All these are holistic. It's just not blockchain alone, but blockchain will be driving all this. Without blockchain, we cannot do all this. Okay? Because blockchain is about collaboration efficiency. If we focus on production efficiency, greed will take over. But blockchain is countering the greed that we are seeing. Okay? And this is what we're trying to do. So this is my table. There are 10 critical enablers for mass adoption. We need fast and stable mobile mesh network. Okay, this is what we need. Blockchain can do that. We need interoperable value transfer gateway. Blockchain could do that. We need privacy protection for user. Blockchain could do that. We need strong security framework. Blockchain could do that as well. We need open source and trust distribution governance. This is important, and this is what blockchain is doing. We need digital literacy and user experience, and blockchain is lacking in that. We need digital identity, global digital identity, even for refugees. Okay, we need compliance easy, friendly to blockchain for good. We need a comprehensive data and Oracle system. Oracle system is just the 6 inches of rainfall. It's outside the blockchain that we have to draw this data from. So we need to have a regulatory framework for Oracle's ecosystem, where we can draw data from, where it is the third-party data that is real data, and it could be decentralized or centralized. And we need to develop the talent, knowledge, and skill to do that. And we need all the resources to do that. And this is what ATech does. So there's a big remittance market, which is worth 600 billion, welfare market 217 billion, for aid 161 billion, healthcare 371 billion, and ATech actually having the identity for refugee, so that when a refugee is pregnant and they need to cross the border to go to the hospital to give birth, you can actually remit the money to the blockchain, okay? And the recipient can then use that particular fund only going to the hospital. So nobody can rob the pregnant woman of that donation because it's on the blockchain. And that particular fund is specifically for hospital expenditure, and for the baby who is tagged to the mother for all the medical expenses. Only blockchain could do that. Okay, so this is important. And then, of course, Singapore government is investing in all this. This is part of the portfolio of Singapore government as well. And this is the cow token that I talked about, right? You can tag the cow using this on the ear, so that you know where the cow is and so on. So it's tamper-proof, NFC enabled, QR code registered. Okay, this is Myanmar insurance. Okay, they're going to tokenize 60 million cows. Okay. And Singapore government is doing a lot of open source project. Open source meaning that all these source code are online. You can download the code and use it, right? It doesn't matter where you are in the world, it's open source. Singapore government has done this. Okay, you can use the code for free. So please use it. Okay, and we have Project Wubin 1, 2, and 3, 4 now. And we talk about this on Friday. There's Malik and I, we could have a panel. We will talk more about Project Wubin. And then we have this open trade blockchain called the network trade platform, because trade itself is chaotic. They don't trust each other. So we can use it for anything that's untrusted party like trade. We can use it. We can harness the back. We must be agnostic to technology, not just blockchain, but anything that can help e-inclusion. Okay, expanding into the open virtual space, and the government diminishes itself by providing its infrastructure. Whoever are doing all this has to diminish itself, so that no one, they're not seen to be the person making, or the organization making all the decisions. It's a democratic process. And that's what blockchain is doing in terms of on-chain governance. Okay, so some thoughts. Would the excluded change the world? Are we doing exactly the same thing as the government and corporate? Then it's not sustainable. Because if it is, then we don't need blockchain. Blockchain shouldn't be centralized. That's why it's important for regulators to understand, so that the compliance is easy. For blockchain, they are doing good. Too much of the developed economy mindset in design. That's why, because all the regulations is for the developed economy, right? Security laws, security acts, and so on. And then that's why investment should go to places where, there will be laid out the red carpet for us to do. More thoughts. Convergence of technology will bring convergence of profit and social objective. This is very important. How do we have regulation to ensure that there's convergence of technology that bring about convergence of profit and social objective? Can blockchain do it? That's why leapfrog economies may have mass adoption before others. So blockchain is a friend to the developing emerging market. You have to leapfrog. You don't need to lay cables. You don't need to go to the Security Act. You don't need stock exchanges. You don't need Banking Act. Everybody is a bank. Everybody is the stock exchange. It's peer-to-peer peer transaction. You leapfrog. Forget about the international regulation. Have your own token law. Okay? Leapfrog. Okay? And the 3 C's, but regulation must take care of community, must have compassion, must have creativity, have the 6 Ds in there, which I talk about, and has to be LASIK to ensure that all these companies will take off, which I talked about. Okay, these are the successful model in digital economy, and we have to understand that in the case of a lot of financial inclusion we talk about is the other way around. We talk about, having insurance for the poor. We talk about payments. We talk about livestock. We talk about insurance and then have livestock identity. No, we move the other way around. What do the farmers need? They need to have livestock identity. So this is an inverse, inclusion model. We start with what the farmers need rather than what we think they need. We think they need payment. We think that they need insurance. No. First of all, they need identity. Start with identity. Once you start identity, then we can actually lower the risk and the insurance will come. It's an inverse triangle for financial inclusion, made possible by e-inclusion because of digital devices. So here, again, another Singapore company that will protect the data. Okay, so now we can do analysis on blockchain data without having access to the raw data. The beauty of blockchain is that we do not need the raw data to do analysis. The individual will have his own dignity. The individual will have his own independent decision. The data belongs to the individual. It doesn't belong to anyone else. Okay, you have your private key to your data, so that there are techniques out there that can do analysis without having the raw data. Okay, they are available called zero knowledge proof, secure party multi-computing, secret sharing. They're all available. Okay, so the ledger can be shielded to protect privacy. Otherwise, the criminals can use the ledger to go after those who are fintech illiterate. Okay, we need to have shielded ledger to protect the needy. We need to have privacy protection for the needy. Okay, and these are all the techniques that are being used in cryptocurrency. So don't reject cryptocurrency. Okay, learn the techniques. You don't use it for anything else, but we need to harness the best from those. So, okay, there are besides smart mesh, there are also decentralized mutual aid insurance. In the village, when somebody's in trouble, everybody will come together and pull in and say that let's put in a few dollars to help this person. That is actually mutual aid. That can become an insurance using blockchain. So the village leader can use the blockchain, everybody can contribute, and if somebody is sick, that money can go to the particular person after verification. So mutual aid insurance, okay, can be done on a blockchain without insurance company, and you disintermediate the insurance by the village themselves. It's like the cooperative that we're talking about. We are moving co-op online now. Okay, we used to have co-op in the UK and so on, but we're moving all the co-op online now using blockchain. Okay, and in Asia, in Singapore, we call it Tontin, right? I don't know whether you heard of Tontin. Okay, and if there's a huge pension shortfall in future, you will see a lot of mutual aid pension fund. Okay, anyone who needs to eat, go to hospital, they will own those services themselves. Okay, so blockchain is about ownership, right? The sharing economy is not a real sharing economy if it's services. Sharing of services will lead to concentration of power and wealth. It is only through the sharing of ownership that we can have a truly distributed wealth and distribution of power that protect individual dignity. Okay, this is what blockchain is doing. Because a blockchain can allow you to own $1 of asset. Okay, the normal financial system is too costly for you to own $1 asset. And the poor is poor not because they have no income. The poor is because their asset is not tradable. Okay, so this we need to know. We need to make the asset tradable and protect them. So these are all the projects. These are all the links. I will give you the link so you can click on them. There are a lot of projects in Singapore for blockchain. Now I just have a few more minutes on this Libra. How much time do I have? Okay, we have 50 minutes. I will stop 5 minutes so that you could have questions. So, how many of you know about Libra? Can you raise your hand? Okay, you all know, right? So I'm not going to say too much. How many know DSAT? Very few people know because everything is in Chinese. So I spent last night translating a lot of Chinese literature for you at 3:30. So you want to know a first hand of what the Chinese is thinking, come back at 3:30, okay? Because I translated all the Chinese documents thinking back to English so that I can disseminate this information to you. CBDC, do you know? How many of you know CBDC? Okay, so let's talk about what they are. Okay, Libra coin, everybody knows. Well, according to the white paper, there are 3 or 4 white papers. Okay, the technical white paper is the deepest. Okay, I spent 12 weeks teaching my students the technical white paper. Okay, they have to go through 12 weeks or 3 hours courses in order to understand the technical white paper. Okay, so I conduct those courses, and it's very tedious because you really have to understand computer science to do that. Okay, but financial inclusion is what they try to do in the very general white paper they talk about. And they have a Libra association with 100 members, of which originally they have 28, now down to 21, because most of the payments company or credit card companies have stand aside. They didn't drop out. They stand aside to clear the regulatory issue, then they'll probably come back to join back in. Okay, and there's a governance governing this Libra association where 2/3 majority will make most of the decision on chain and off chain. So the association itself has to have 2/3 decision making on chain as well. The consensus algorithm cannot have 1/3 malicious element. Okay, so 2/3 is very important, and 2/3 is 30. 2/3 is 1/3 is 33. If the government can control 33 out of 100, then Libra can't do much. So as a regulator, all you have to do is come together and have 34 nodes. You can be so-called the malicious element in the system. Nothing can go through. Okay, so that is the trick. You don't have to control the entire Libra system. You just have to control 34 nodes. 34 membership can be government-linked companies or whatever. Then you are in business, right? So this is what has not been discussed in public. Okay, because they always think about you have to control the entire thing. No, you don't have to. And I'll tell you how the Chinese are regulating blockchain. Okay, in the afternoon. Okay, and it is stable coin. It is using distributed ledger, not necessarily blockchain. There's a memory, but they're not in blocks. Okay, so you can query historical information, but they're not really blockchain. They abide by low margin, asset light, scalable, innovative, and compliance easy. They comply to digitalization, disintermediation, democratization, decentralization, and Mark Zuckerberg keep on saying that I'm going to diminish Facebook. I'm not going to be the center, right? Well, maybe he will even resign for this thing to take off, right? We don't know. But we all know that 90% of the income of Facebook come from advertising, right? And advertising, what is the raw material for advertising? Data, right? It used to be compliance easy. Is it going to be compliance easy anymore? Probably not. So this 90% is going to probably be struggling, right? So therefore, the new source of income will be transaction fees from this network, right? Because the 100, each of them is going to come out with 10 million as a membership fee. In total sum is 1 billion. And this 1 billion is going to be used as a backing for the 1 billion that initially going to be issued, probably, right? And everyone that comes in and buy more of the token, they will be backed one by one by the underlying 6 countries, of which Singapore dollar is one of them, right? There are 6 currencies in them. Number 1, can you guess what it is? US dollar, right? Second one, Euro, right? Third, Japanese yen. Fourth, British pound, right? And then I think it's 5. Fifth, Sing dollar. Okay, Singapore dollars in there. So, what about 6D? What's the 6D that I talk about? Data privacy, right? So, question mark, question mark, question mark, because the intention is not clear to the market or clear to the committee in the US. So this is the intention. And CBDC is central bank digital currency, okay, which is a hot topic now. So later in the afternoon we can go deeper into this. And DCEP is the Chinese version. Very, very innovative. Okay, a lot of thought has been going into this because they started this research about 4 or 5 years ago. So it's for digital currency, electronic payment, the 2 tier. Okay, One is the tokenization of renminbi, and then it's about electronic payment. Two-tier, and it's very interesting. It doesn't stifle innovation at the commercial level, which is very interesting. Okay, you want to learn more about that? Come back at 3:30. So this is what it is. The ultimate of the design thinking is this. If somebody come to you with a design thinking of a blockchain business model, converging with other technology, which we'll talk about later this afternoon, it has to be the case that it is trying to complement what the government and the corporate cannot achieve. If they're trying to strengthen the monopolistic power, they're trying to strengthen the wealth position, then we don't need blockchain. The centralized database, centralized ledger, centralized business model is more powerful, right? But here, we are looking at the other side. We're trying to solve problems that cannot be solved. So whatever you design have to complement the existing system, not to challenge the system. It is not competing with the existing system. If they're set up to compete with the existing system, then that's not the kind of blockchain that we're looking into. Second, it is here to serve and not to strengthen the monopolist power to rule. Okay? If it is, then it doesn't make sense, right? The centralized will do